Let me share screen.
Laura, cuando él empiece, vamos, formalmente, ponga ahí, connect now, y cuando él empiece, we are live, not alive, we are live, okay?
I put it on WhatsApp. He sent a Zoom link already, so I'll just,
Okay, good.
send it to us.
Entonces, voy a poner que va a usar.
You're recording it, right?
correo electrónico como credencial para entrar, siempre. Entonces, hay una pregunta que dice, ¿cuál es el nombre materno de tu mamá? ¿Dónde naciste? ¿En qué calle te quedaste? Pero con lo que nací, con lo que se llama Caripito. Caripito es. De nuevo, ¿dónde está eso? Yo sé, pero ¿qué pasa? Que la Margarita.
All right. Good morning, Canvas Real Estate. I'm Austin Palacios. I work for First Order Mortgage Lenders, and I am your preferred lender at this beautiful office. It's a sunny day, and we're going to be talking about how the condo rider affects financing.
Me imaginé. Es para que tú hicieras.
All right, I'm sure you guys know this information already, but we're going to get into what exactly is the condo rider, right? So the condo rider itself is just an addendum to the real estate contract that we all know, right? That we see on every single deal, that it's specifically for the condo transactions. Now, what does this include? Okay. It includes details on the condo, such as the condo docs, how it looks structurally, budget, insurance, any legal aspects of the condo, and so on and so forth, right? But it goes a little bit deeper into the actual documents and inspections that the condo has. So that way your buyer will be able to look at it and analyze them with you to make sure that they will be able to get financing, or they will be able to be happy with their purchase, right? Here are some key elements of the condo rider. Okay. We have the association fees and assessments. Now, what does that mean? That means there's details of the condo fees, of any current special assessments that are going on, any reserves or reserve studies that need to be happening. If they're missing reserves, that will be on there too. And any legal matters. Legal matters meaning anything that has to do with them being sued, like for a slip and fall, or, you know, a part of the stair fell down and hit somebody, you know, stuff like that, that will show up on that, okay? The next thing that you will see on the condo rider is approval contingency, okay? This is very important because they give you a certain amount of days to review these condo documents. If you review these condo documents within the few days and you decide to withdraw, that is perfectly fine, right? So please be aware that this approval contingency is very important when reviewing these condos and these condo documents. Okay. The next thing we're talking about is pending litigation and structural issues. Now, this is a big one because I've seen plenty of deals get killed by litigation and structural issues lately. Okay. I've seen deals get killed. I've seen deals get killed by litigation all the time. I mean, you know, if somebody's suing the building for millions of dollars, that's going to be an issue, right? For financing, because it's going to appear on the questionnaire and it's most likely not going to be accepted by Fannie Mae. But if it's something smaller, like a slip and fall, that usually goes through. Okay. Now, structural issues is the biggest one of these two right here. Structural issues are imperative for financing nowadays, right? Even though there's many options from conventional to non-QM to get these condos financed, structural issues are the main priority nowadays. They even added several questions to the condo questionnaire in 2025 that are targeting these structural issues. And you'll see later on in the presentation, I'll go a little bit deeper into what exactly they're asking for. Okay. And lastly, the last key element of the condo rider is the right to review condo docs. Like I said in the previous slide, buyers have a set period to review everything that has to do with the condo. That means the association rules, fees, litigations, inspections, budget, insurance, all that stuff. Okay, so that's very, very important because during this period, let's say you get into contract, in that period, you need to set up a meeting between the buyer, yourself, the realtor, and the lender to try to get everybody on the same page and make sure this condo is going to be one, financeable, and two, the perfect fit for your client. Now we're going to get into how does the condo rider itself affect financing. Now, the condo rider doesn't directly impact financing, but it does highlight a few key things that do impact the financing, right? So like I said before, the condo rider has stuff like the condo documents. It has your reserves, your insurance, your structural reports, right? So all that stuff, depending on where we're going to be sending this loan, is going to be affected, right? So if we're going to be sending it to Fannie Mae and Freddie Mac, it's going to be a lot easier to get through than with FHA, right? That's just a plain example. To get a spot approval on a condo here in South Florida is nearly impossible, okay? So, we submit all these documents to these entities, Fannie Mae, Freddie Mac, FHA, VA, and they have to be approved by them. It's not just us. When it comes to non-QM stuff, yes, we're going to be super flexible with that, right? Non-QM is a whole other story because you're putting more down payment and you have to be, all you really need is the structure to be okay and you're good to go for a non-QM deal. All right. So please, please, please make sure that you are getting together with myself or whoever you may be using to plan how you're going to get this condo approved to get your buyer into that property. Because without that planning, I promise you, you're going to make yourself look bad because it's all about the lending aspect on these condos. Yeah, it's fine. We can get an amazing deal on these condos. But in the end, if you can't finance it, that means your buyer cannot get into that property, right? Next thing we're talking about are reserve requirements. The basic rule of thumb, 10% in reserves, right? 10% in reserves, meaning you get all their expenses. And then you see the reserves. And you got to make sure that reserve amount is 10% of all the expenses or income that they have, okay? And oftentimes, there might be a little thing here and there that we can add back, but that is up to its discretion and it's based on the guidelines that we have from Fannie and Freddie Mae, Fannie Mae and Freddie Mac. Okay. So keep that in mind. You can't always add something back, but sometimes you can. So it's important just send your lender the budget, whether it's myself or somebody else, send them the budget, send them the insurance, because knowing off the top of your head, oh yeah, you can add that back. And that's not always the case. You got to get it looked at by a condo team. Okay. The next thing we're gonna look at is litigation and structural issues. You see a pattern here. Litigation and structural issues are huge. They're huge, huge, huge. And I cannot stress this enough. Properties with huge unresolved legal battles, that's gonna be an issue all day. And the worst one that I keep saying is the maintenance issues. Because guys, if this thing has millions of dollars in repairs, it's going to be very hard to find somebody to finance this building. And that's just a fact. When something is at risk of falling apart, you or I are not going to be the ones that are going to be financing or putting the money towards that if it's going to be falling apart in the near future, right? And lastly, we got increased buyer requirements, right? So what do I mean by this? Oftentimes, if we can't go 5% or 3% down on a condo, that means we might have to go 10% with a 15% second. That way we get that limited review. That's one way to get around it without paying so much down payment. We might have to put the full 25% to get the limited review if they have the money. They might have to go 30% if it's an investment property, and then on the flip side, we also have the non-warrantable condos. And that can get a little bit, it's like because there's a lot of non-QM products that we have with different regulations. So we're very, very flexible on this, but we have to fit the pieces in the right spots in order for this to work. Okay. And sometimes too, I've been seeing a lot of condos lately that the credit scores need to be high to get in there, which doesn't really make sense to me. I don't know why I do it, because if I'm approving you for a loan and they're asking you to have a 720 score, but I'm approving you at 680, that shouldn't matter. But it is what it is nowadays, and we have to be diligent of these things, especially when another one too, when a condo is 50 plus, or like an H, that's another one, because if they're very, very strict on that, you have to make sure that that condo is going to allow your buyer to get in there before getting in. Okay. All right. So now this is going to be the key. This is what I was talking about, right? This is what we want to get into. These are the 3 reports that were added on the condo writer. Okay. And I'm going to explain what these are and how they affect, right? So the first one on the list, you have the milestone inspection report. Okay. This is required for older condos and buildings to assess their structural safety and maintenance needs, right? Just like all these basically do the same thing more or less. But if significant things are found in this type of report, this building will not be eligible for conventional financing. Okay. Why? Just like how I said in the previous slide, if it was you or me lending this money, and this is Fannie Mae, this is a big entity, right? It has nothing to do realistically with us for Origin. It doesn't have to do with your lender over there. It has to do with Fannie Mae and Freddie Mac. Okay. Freddie Mac and Fannie Mae are not going to want to lend money on something that they know is falling apart. Okay. So that is the point of all 3 of these reports. All right. So if significant issues are found, we're talking about big, it could be structural foundation. It can be something that they're working on. They have a lot of repairs to be done. It could be all sorts of things. I've seen already an abundance of different scenarios where Fannie Mae turns it down, right? Now we have the turnover inspection report. Okay. This is conducted when the developer transitions to the homeowners association, right? That means basically when the condo owners actually take over the association instead of having the developer. This is on it might be a newer building. This will identify several different aspects of the building that is either weak, defected, or they need or they have concerns. Okay. This can affect loan approval how, right? Just like this, the first one, it's the same go around, okay? If the maintenance is faulty and there's concerns on the building, there's a very likely chance that this will not get approved, right? With Fannie Mae, Freddie Mac, FHA, VA, all that stuff, right? So we have to make sure these reports are in order to get buildings approved. And last but not least, the last inspection on our condo rider is going to be the Structural Integrity Reserve Study, the SIRS, right? I don't know if you've seen the trend already, but it's all about the structure, okay? Ever since that incident happened a few years back, the building collapsed, everything changed, okay? They want to make sure all these buildings are standing and they're going to be good, okay? This one specifically evaluates the condo's financial preparedness for long-term structural maintenance and repairs, right? So this is where those special assessments come in, if they have the reserves to cover that stuff, and so on and so forth, right? Condos without reserves, meaning 10%, may not qualify for financing under Fannie Mae guidelines. Now, when you do the actual reserve amount, and you divide it by the income or expenses, whatever they have it there, because I've seen a million different condo questionnaires and they always have it listed differently, their bottom line. You can add some things back, but it has to be for Fannie Mae guidelines. So I would need to see, or the lender, whoever you're using, we would need to see the condo questionnaire, and we will tell you like, hey, you can add this back. You got 10%. This would make it, right? So that's key when doing this type of deal. Okay. So guys, keep in mind during the period that you can analyze your documents for these condo deals, these 3 inspections are gonna make or break your deal 100% of the time. Okay. Because it's one thing to have insurance or a budget issue, but these 3 will also, can also hinder your chances of getting a non-QM deal funded. It's not just conventional. Even if you get a high down payment and there's a bunch of structural issues going on with the property, this is not going to fly anywhere. I don't even think many hard money lenders won't even touch buildings that have a lot of damages with the building going on. Okay. So what does this mean for my realtors, right? Realtors, you have to identify these things early on, meaning we need to look at these condos preferably before we get under contract, right? All the documents, because they should be providing that for you, no problem. And then if they don't, and you get under contract because it's a great deal, you can't miss out on it, that's fine. But during the condo period, the first day we're under contract, the first hour, the first minute, you need to be sending that budget over to me or to the lender, and we need to review it ASAP, because we can't have your buyer on the hook for something that's going to get denied, right? We don't want to risk their down payment. I mean, their EMD ever, right? Our goal is to save them money and get them good deals. If we don't do that, we're not doing our job. Okay, that's bottom line. Educating your buyers. Why should you educate your buyer as a realtor? Well, the more informed your buyer is, the smarter of a decision they're going to make financially. Okay. You guys are the experts in this industry. Okay. Yeah, I know condos are hard. It's difficult to get around, but you guys are the experts and you guys need to educate them, because nobody knows about the discrepancies and the hardships people are having with these condos more than you guys, because you guys are seeing on a daily basis with your renters, with your buyers, and then what telling you on the financing side. You guys have it all. You guys see it every single side of this coin. Okay. So you have to make sure you educate your buyers. Tell them, hey, like this might come up along the line. You never know. There's a little bit more risk when buying a condo, even though it's a better price. There's stuff like that, right? Even though there's going to be rules we put into place to help these condos be a better investment in the future, right now, it's still rough. It's still a little rough, okay? The third bullet is working with a preferred lender. Whoever your lender is, it's fine. It could be myself. It could be Fulano from the block. But make sure they're looking at your budget. Make sure they're looking at all these documents. Make sure they tell you at least half up front that, hey, this has a really good chance of being approved, right? Because you don't want to waste your time. You don't want to waste your buyer's time. And you don't want to waste anybody's money, because guess what? Time is money, right? So you have to make sure we're getting this done, okay? Work with your lender, ask them, because if they tell you this is not financeable, then there's no point of wasting your time staying under contract, right? You need to get out of there ASAP and go find another property, okay? And on top of everything, we have condo approved lists already, guys. So if you want a condo approved list, text me, email me, call me, doesn't matter. I will send you literally a long list of all the condos in Florida that are currently approved with us, and it'll tell you if their budget is expired, it'll tell you if their insurance is expired, and it'll tell you when it was funded and if it was funded with a limited or full review. Now remember, a full review, you can do 5% down, and a limited review is for 25% down. What is the difference between both of them? A full review is a full condo questionnaire. They're gonna ask 1,000,000 questions on that condo questionnaire. Okay. The limited review is a much shorter condo questionnaire. So with that limited review, it's more likely than not going to pass. And if it doesn't pass that, you're most likely going to want to go non-warrant, right? Which is a little higher interest rate, but it makes sense. If you're going limited review already, and you really want that property, non-warrantable can be the option for your buyer. Okay. So I was getting into this already, pre-check condo eligibility. Okay. Guys, make sure you're planning it out with myself or another lender. Doesn't matter who you use, could be your brother. It's okay. You have to do this because I want you guys to be successful. I love this branch. I want to make sure you guys are the best agents in the market, the most educated agents in the market. You guys have to pre-check these condos because it makes you look bad when you get under contract and a couple weeks in and the condo doesn't close. Right? Nobody wants to get under contract and cancel it halfway through the process. That makes you look bad as a professional, and it makes whoever else that you're paired with to look bad as well. Okay? And that goes into reviewing these docs early. We're checking reserves. We're checking the financials, the insurance, legal matters, and now these inspections that are going to be key in these future financing of these condos. Okay. And that's basically it for what the condo rider and financing has to do with each other. Now it's really about structural obligations from these inspections, right? It's about the reserves, it's about the litigation, and it's a lot of things into one deal, right? And these deals can be a pain in the butt all the time, but you got to have a good team to get you through it. Okay. That's why I can't say this enough. I probably said it already like 10 times this meeting. Please send the condo docs to your lender beforehand, before getting under contract. Because if you don't, you're going to run into these problems over and over and over. And you're going to make yourself look bad. And God forbid you lose a client because of that. Okay. Do you have any questions? ¿Tienes alguna pregunta?
Lo que cuando llegué, sí me gustaba lo que estabas colocando sobre los créditos de Fanny, de BA, de
Yeah.
las modalidades. No sé si puedes explicar un poco más sobre esa lámina antes de entrar al tema de lo que es el condominio.
Yeah, so para hacer algo de Fannie Mae convencional es más fácil para hacer una aprobación de un condominio con ellos
Okay.
de todas las entidades de FHA y VA, right?
Okay.
So con FHA y VA son más strict, right?
Okay, más
Ellos
estricto.
piden un poquito más cosas, like fidelity.
Okay.
Es un parte del seguro.
Creo que lo dice en inglés.
Yeah.
Yeah.
Nah, estoy practicando, so it's okay. But
Okay.
look, there's a piece of the insurance, it's called fidelity, that FHA specifically needs,
Okay.
right? And they also need to have, I'm pretty sure it's 3 months of reserves in their account already. So I have to ask for them their current account,
Okay.
right? Because they'll give you the budget plan, but
Okay.
doesn't mean they have those reserves right now.
Okay.
So you need to get the 3 months and see, okay, yeah, he has the 3 months. So then you're good, right?
Sí.
And VA is a little bit easier than that, but it's around the same thing, so definitely the easiest one is gonna be Fannie Freddie, and then it's gonna be, well, I'm sorry, the easiest one is gonna be non-QM. Anything that you put un pago inicial de 25% o más, lo más fácil, claro, porque el questionnaire es más pequeño.
Okay.
Hay como like 5 o 10 preguntas.
Okay.
Y condo questionnaire, hay like 40 preguntas, you know what I mean? Like it's pages of
Okay.
questions. For FHA and VA, those are gonna be hard at most cases, but we've done them before, y nosotros tenemos una lista de todos los condominios que que nosotros
descartado.
aprobaron, right?
Ok.
Y si su condominio está en esa lista, ya,
De una vez lo descartas.
ya es muy fácil para hacerlo.
Mm.
Um,
¿Y cuáles son? O sea, si quieres me lo dices en español. ¿Por qué tomas en consideración esos condominios de una vez y lo descartas? O sea, ¿qué tienen de malo esos condominios que ya ni siquiera ustedes lo revisan?
okay, so a veces los structure
Ujú.
están like pedazos del structure son cayendo o tienen like cracks o algo así o ya alguien somebody submitted it
Ok,
allá a Fannie Mae
ok,
ese mes
ya.
y
Y
no
no
lo
pasó.
aprobaron,
Exacto,
right?
ya.
So
Ok,
a veces eso pasa.
ya.
Um, Otra cosa es, un litigation. Si alguien es suing the condominium
Ok,
por un monto grande,
ya. De una vez, ya está
ya,
descartado.
eso es lo tres cosas más importantes.
Ok, lo que me dijo Marlene es que tú ibas a tomar en consideración, o sea, que ibas a hablar sobre los casos actuales de lo que está pasando ahorita con los condominios, que viene
Yeah,
siendo esos, ¿no?
yeah, yeah.
Yeah,
Yeah, so, a veces, no, yo hacía un condominio antes que tenía un litigation de un slip and fall.
ok,
Right? So teníamos que trabajar, con esa persona y aprobar ese condominio con ese litigation that slip and fall,
ok,
right? So eso fue un poquito difícil, pero podíamos hacerlo,
yeah,
right? Pero si fue, otro escenario fue que un pedazo del escalera
ok,
se cayó un poquito. Like, no, I'm not talking about like the escalera entero, right? But like the little
hay
rail,
una fisura,
right?
yeah,
So, ese pedazo cayó y fue un litigation grande.
wow,
Yeah, like ridiculous, like millions of dollars. And no podíamos hacerlo, so nadie lo aprobó y teníamos que hacer un non-QM, non-warrantable y ya, no podíamos hacerlo.
wow,
Porque los préstamos de non-QM son más flexibles,
ok,
right? Y claro, con más pago inicial, todo es más flexible.
más fácil,
Porque si puedes hacer un limited review, fantastic,
ok,
right? Pero el limited review todavía necesita insurance, seguro bueno,
ok,
y reservas,
ok,
right? Si no tienes eso y tienes litigations, vamos a empezar a buscar manera de hacerlo con non-QM. Non-QM es los préstamos que no son normal,
ok,
like
ok,
cookie cutter.
ya, eso,
Yeah, because los préstamos normal son convencional,
exacto,
FHA, VA,
ok,
like, USDA, all that stuff.
y aquellos los intereses son más altos, me
Sí,
imagino,
un poquito más
ya,
alto. Yeah,
ya.
yeah, yeah. Y no hay, like,
¿Qué tan alto? 17, 24, algo así.
eh, so, un condominio, el 30-year fix right now para un condominio es 7.2, 7.3, right?
Pero es alto.
Yeah, es un poquito alto. Y con los non-QM debe ser un poquito más alto de eso. Eso es like 7.5, 7.7, si tiene un crédito bueno. Y si tiene un crédito malo, debe ser un 8 o algo así,
Ya,
right? So, pero hay diferentes maneras para coger estos condominios. Tenemos que planear todo, tener todos los documentos y ver todo antes de entrar en contrato,
ok,
right? Porque si lo haces adentro del contrato, solamente tienes algunos días para revisar todo. Eso es muy
exacto,
difícil
exacto.
para yo someter todo al equipo de condominio que chequea todo,
Al menos que sea un condominio nuevo que ya tú no lo hayas chequeado anteriormente. O
yeah.
sea, pero si ya sabes cuál es el condominio
No,
que te
ya,
vas
eso es más fácil, ya.
ya filtras.
Yeah.
Ya. Bueno, me interesó, gracias.
No, ya.
Practicaste español.
Yeah. Más o menos, es que soy medio gringo,
Ya, yo pensaba que tenía sangre latina,
ya no, soy cubano, pero nací,
pero
nací aquí.
está bien, siempre es bueno, un poquito de español.
Yeah. Yeah.
Interesante. Gracias.
Bueno, si alguien más tiene más preguntas, tú puedes textearme. Tú tienes mi celular también. Y ya, estamos bien. Estamos terminando. Zoom.
Good job, Austin. Buen trabajo.
Gracias, Otávio. El leal Joan. Ese es tu papá.
Yeah, ese es mi papá.
Bonito
Ese
tu
es mi
nombre,
papá.
Austin.
Yeah, Austin. Austin como la ciudad en Texas.
Exacto. Muy lindo.
Yeah. No, y Rey me ayuda con todos los negocios también. So, si necesita alguien en el reunión que habla bastante español y quiere ser más seguro con alguien que puede hablar perfectamente, yo traigo a él y ya.
¿A quién? ¿A tu papá? Dices
Sí.
tú.
Ya. Y la oficina de nosotros es like 2 minutos para allá.
Ya. Me está diciendo Marlene que tú decidiste quedarte aquí y tu papá está allá.
Yeah, porque hay
Esta es tu
más,
oficina
yeah, hay más like privacy, porque ahí hay locura, porque nosotros
Ya,
tenemos
ya.
más LOs que son nuevos
Ya.
y yo tengo que entrenarlo,
Ya. Te fastidian
ayudar
mucho.
a entrenarlo. So, aquí mismo, estoy enfocado en mi cosa, and then ya por la tarde yo me regreso allá, and then,
Sí, a mí me dijo
la
Marlene que
locura
tú dijiste
empieza.
que nadie viniera para acá, solamente te iba a quedar tú ahí.
Yeah.
Es el escape de él, la salvación es Canvas Miami Lakes.
Yeah, bro.
Multiplicando el sueldo ahí, jugando Candy Crush.
Sí, y Raquel, no te tienes que preocupar porque el papá de él se involucra en las transacciones, o sea, lo que haya que hacer. Y entonces acuérdate que está Marlene y estoy yo para
Gracias,
asesorarte y ayudarte
Ay, no, ay, no, yo sé
en
que tú eres
cualquier
mi todo.
transacción. Así que nunca vas a estar sola en el proceso de cualquier transacción.
Gracias. Yo lo sé. Gracias, Joan. Me siento acompañada en el proceso.
Seguro que sí.
No te
All right, my man.
All right, thank you, Joel.
I'll
Thank you
see
for
you
being
later.
here. Absolutely, man.
Please don't forget about my pre-approval.
Nope, I have it done almost. I just gotta
Thank
send
you.
it over.
Appreciate it.
All right, yes, sir.
Bye bye. Hasta luego, gente.
Bye.